What's up, guys? It's Amma Jamma here, and I'm going to go over SPY levels for this week and what to expect. First off, we have the SPY chart up here, and I am on the daily. I've got the 200 MA and EMA up, as you can see here. And I'm going to turn off the EMA, because when we have this 200-day MA on, it doesn't matter which time frame we put it on, it doesn't switch. So we're going to keep that on. So I've got 200-day SMA, simple moving average, smooth moving average on. As you can see, with a full candle open and close sub the 200 here, but we did pick up some support. What I had told the Discord, we needed to see last week, and they will tell you, and anyone watching this will recall, exactly what we needed to see was a reclaim of this area right here. All right, now we're on the weekly chart, and we reclaimed it. We closed just above it. That's substantial. This is our bull bear line next week right here. Make it bigger. There we go. That's our bull bear line. That's huge, huge, huge level. Approximately 560, 561. So what am I looking for going into next week? Obviously, we want to reclaim the 200. We're close. We're not quite there. We closed just at that line we had spoke about. So that's the bull case scenario once we start to get into this area here. So I would expect a couple things to happen. There's a couple scenarios here we're really kind of looking at. And the first one is right here, that we kind of bounce around at this point, this pretty major point right here for the entire week. And we stay between like 560, 558, and 568. That's scenario one. All right, but our bull scenario and our bear scenario are the following. In order for me to really believe in our bull scenario, we need to not only hold this level right here, turn it into a support resistance flip. We need to hold that and regain the 200. So something in some like this, bounce around, and then we start to pop up. At no point do I consider any sort of a bullish reversal confirmation till we get that weekly candle close back above the 200. So we need to wait the full week on that. So it would be this area right about here. All right. That's really what we're looking at. So our bull scenario is back above the 200. Approximately, realistically, we want next week to close above 570 is really what we're looking at. All right. And that's our bull scenario here. That green. Bear scenario is on this retest of this major support resistance. We're retesting it right now. We get that rejection and we bounce around that area here. We come up to the top of this range and then we get the weekly close below this week's low. That's our bear scenario right here. Okay, and these are weekly. We're going to talk about this in a weekly fashion because that's really what is important here. So we got our bull and our bear case, and then we've got neutral within it. So really between 550 and 570, we could realistically bounce. I know that's a 5-point area. Now, remember, we are talking about long term. I'm not talking about for the week. For the week, as far as shorter term, these are our bull and our bear cases. So our bull case is weekly candle above 200. All right, that's our bull's case. And then our bear case is previous lows, which is 550. So that's our bull and bear scenario here. And these are a play, remember, off of this area here as well as the 200. And if we're pinched between the 200 and right here, if we sit pinched in this area and either below or above it, this is our neutral zone. Okay? Sorry about the dog bark, guys. All right. So that's what we're looking at the SPY. Now, in the shorter time frame, if I put on hourly, 2 hour, what levels will we be looking for taking entries? For me personally, I like bullish entries above 565, and I like bearish entries below 557. So 565 and 557 are our neutral zone entries. For shorter term. So that's what we're looking at on the SPY particularly, guys. And just to reiterate, if we go onto this weekly chart, what these ranges are, even the monthly chart. I'm going to show you what these ranges are. That I've drawn in. Ignore everything we just drew. So what this is the following. This yellow range is our range pretty much since 2008. We have obeyed this range for the better part of 17 years. And our standard deviations off this range imply a couple things as well, but I got into that more in the Discord. But we have always maintained this range throughout. I'm going to show you where we are now because we hit the top of the range and we're starting to break down. So our bear case scenario for me is 515 by September. That's my bear case. Now, if we want to get even longer term on this, for everybody that tries to say that we are in a bubble and it's like the .com bubble, they don't know what the fuck they're talking about. And I'm going to show you why. Right here, this blue line. Let's make it super thick right here. We always return to this line. And we actually sat above this line for the better part of the .com retest. And then again, we didn't dip below it until 08. But since then, we have hit our high on this blue line all the way through 2020, COVID. We were super glued to it in this area here. And we popped above it once, and we're popping above it again. So this line, these two lines here are our low. And worst case scenario, all that is this move here. Okay, let's pull it up. Worst case scenario means coming down like we did for COVID lows and for 2008 lows. That's all this blue line worst case scenario line is. But it's our median, it's our mean. We're always going to return to the center point. All right, you swing to the left, you swing to the left. We always rebound at center. You know, it's our midpoint. And that's what happened. When we get too far away, we return to center. Too far away, return to center. Dip below, came back, returned to center. Hovered this center all the way through here. Let me get rid of the 200-day. So it's cleaner looking. There we go. All in here, sat right on it, popped too high above it back in 2022, retested it. Now we're too high again. So anyone that tries to say we're in some sort of a bubble, it's absolute bullshit because we could see right here that we're pretty much moving along with cost of living. What that means is you can't expect a stock to stay at 2009 prices when a McDonald's cheeseburger was 25 cents in 1980, and then it was 99 cents in 2000, and then it was $1.29 in 2010, and now it's $2.79. We're on par with that. We're on par with the cost of goods and cost of labor. That's all we did. So the price rising is in a lateral comparison to that. So no, it's not a bubble. No, we don't have to come down 30%. And my worst case scenario, like I said, is 510 or so September or 480 to 490 end of year. Or we sit up on this top half of this yellow zone here. We maintain that. So that's all I got. That's the SPY levels we want to watch. And I will see you guys in the Discord. Thanks.